Okay guys, welcome to the FX Acceleration Program Mastermind, very first of many, held every week by the team and myself, Simon Davis, Zone Trader. Guys, like, there's such an opportunity out there in Forex. I don't know about you, but there is an amazing opportunity out there in the Forex industry. It's a $3 trillion a day industry. And if you can get your hands on just a small portion of that, then it's going to completely revolutionize your life, your family's life. We're here to give you Forex psychology, mindset, and technical analysis skills that you can take away today and on any other video, take away and use within your trading. So guys, I want to thank you all for joining us today. It'd be pretty boring and quiet on my own, so thank you for joining us and being a part of the team. And let's get into it. So does anybody have any questions on Forex, where we're going to start so far? No? So we could talk about amongst ourselves about psychology, or how you're getting on with Forex, any problems you're having with Forex.
The only problem that I have right now is that I don't have a big account. I need a bigger one.
I don't hold trades over the weekend, no. I'm an intraday trader, so I try and close them out. So your problem is having a big account?
No, that my problem is that I need
a big account.
I want
Okay.
a big account.
So how are you going to solve that problem then? Are you going to trade your way to a bigger account, or are you going to have a consistent equity curve and then go away and find people who can invest in you and become a money manager and then have a big account through money management? What way do you want to go?
Actually, both. Growing my own account and also looking for some investors, but who knows?
So your problem is just your account size?
Yeah.
And you're having consistent profits right now?
Yeah. Fortunately, yes.
Well, it's just time then, and it's all about being patient in the game as well. Not only patience on the charts, which is the most important factor in Forex, is patience, but it's also patience in the game as well, and maturity of a trader, and taking it step by step and being humble with your small wins. Because if you can make consistent small wins, then there's nothing stopping you from making consistent huge wins a year from now, 2 years from now, and that's where you can buy the mansion, buy the cars, and go traveling. You hear me? So it's all about being humble where you are right now. You're in a very good position, being humble and just taking it step by step and just trading. Basically, just keep trading. Keep doing what you're doing.
Of course. Actually, I was a kind of trader that was afraid of not holding the positions. It was like I was stick to the screen, looking every second if the trade was already on profit. Then I watched the ICT videos, and he said something about, if you are too worried about the trade, maybe you are using the wrong lot size, and that was the problem. I was overloading my trades. I was using bigger lots
That's it. Yeah, that's it. If you're worried about a trade, then you're leveraging too much, or you haven't got your mental game right, where you know that you've got to be like, in your head, you've got to be okay with losing that trade. You've got to be okay with losing that trade. If it goes in your favor, grand. If it goes in your favor, if it doesn't go in your favor, then it's okay. You've got to be okay with that. Like that's what ICT talks about. He said one of the hardest things in Forex is not entry and exits. It's actually planning the trades in order to money manage, because it's all about a game of money management. You've got to have a positive risk reward and know overall over a set of 10 or 20 trades that you're going to be profitable. Even a 50-50 trader can be profitable with a positive risk reward. Yeah,
that used to be my biggest problem, the psychology, you know.
Yeah.
Right now I risk 1%, 1.5% maximum of the total account value, and damn, I sleep really well. In the morning, I just wake up, I check it every hour, every 2 hours. If it hit the take profit, okay. If it hit the stop loss, I have no problem because I'm risking only a small percentage. I used to risk when I had that problem with holding the trades. I was risking 5%, even 10% of the total account value. That's why I was so scared of holding the trade.
Yeah. I think 5% okay. I mean, people say 2%, but I personally think 5% okay, because if you're on a 1 to 3 risk reward and you're risking 2%, when you gain, when your profits wins, when your trade wins, you're 6% up because you're risking 2 to gain 6. It's 3 to 1. But if you're risking 5, you gain 15. So if you can work it in a way that you're happy to risk 5%, but gain 15%, your account is going to grow much faster. It's all maths. I believe that a blind man could be good at Forex because it's all maths. If they've got the maths down to a T, then, and they flip a coin in the morning and say, oh, if it lands on heads, someone tells them it's going to be, if it lands on heads and someone's got to tell them it's heads, obviously because they're a blind man, they can become a profitable, consistent trader. It's all about read Mark Douglas Trading in the Zone, because that is an amazing book to read or listen to or watch one of his webinars. Not webinars, but watch one of his performances on stage, and they're excellent. It's excellent. It's all just being happy with your losers and being happy with your wins, not ecstatic with your wins, because that's one of the worst positions we can be in, because we get euphoria and start over trading or over leveraging. And if you lose a trade, then it's going to be like you've lost a trade, you feel discouraged, and you won't be able to focus as well as you should be to take the next trade. So it's all about staying level in your emotions by being okay with losing trades, because that's all part of the game is losing trades.
Yeah. That was another big problem I used to have. That when I was in red numbers, I was really patient. I mean, I was waiting until the stop loss got hit, but as soon as I was in blue numbers, I was like, oh, I gotta close before it goes back to red numbers. And I don't know, if I was risking 20 pips to win 40, I mean, at the end, when I was 10 pips in profit, I was like, I'm going to close it. And that was my problem.
Yeah.
And that was also part of not having a proper trading plan. But
you need to know where the highs and lows are. If you're selling, you need to know where the low is, where you're going to take partials or take it all off. And you need to know where the highs are and take partials or take partial off or take it all off at the high. The next available high.
Yeah.
You need to know your exit. But it's all about being okay with your losers and being just a bit happy with your wins, because it's just got to keep level. And if your math's right, I honestly 100% believe that a blind man can be a profitable trader. You can take what you want from that and work out yourselves with the positive risk reward and do the maths and mastermind it on your own time. But I 100% believe that can be achieved. So like a blind man can actually be a profitable, consistent trader. Because it's only a flip of a coin. It's only win or lose. And it doesn't matter if you win or lose. It really doesn't matter. Obviously, if you lose more than you win, then yeah, you're going to be negative bankroll. But if it's 50-50 and you've got a positive bankroll, then you're going to be a consistent trader. Just have that mindset of, and that's all from Mark Douglas, Trading in the Zone, guys. If you, the viewers watching and the people on tonight on live, I strongly advise you go through what Mark Douglas is talking about, trading in probabilities, because that's what it's all about. It's all about maths. And on top of that, it's all about knowing technicals as well, obviously. But if your maths not right, you'll never become a profitable, consistent trader. If your plan's not right and your mind's not right. Because I used to, if the trade's coming down and I've got like a 30 or 20 pip stop loss, the trade's coming down towards me and I'm buying and the trade's coming down towards my stop loss, just move it. I think, oh, it's only a deeper retracement, and in the end, boom, I lose 90 pips. You know, I used to. We've all probably been there, but it's all about being okay with that loss at 30 or 40 pips. You know? It's all about being okay with it. And take the next trade. How do I monitor trades throughout the day? That's a good question. I try not to, but I do, obviously, because I'm in a trade and I want to know how it's doing. So basically, I will place my trade. I'll have my take profit, 3-to-1 risk reward, and I'll have my stop loss. So I'll have my stop loss and my take profit set. So then I know that. Yeah. So yeah, the answer to your question, and the question was, how do I monitor my trades throughout the day? Like I said, I put on my stop loss, take profit. Put on my stop loss, take profit, and then, I mean, lately I'm literally just trading one pair on one trade or 2 trades a day in one pair. And it's been a challenge for me to do this, but I've finally got there where I'm actually humble enough to trade one pair, because there's so much opportunity out there. There's hundreds of pairs, probably a bit less, I don't know. But with exotics, there will be, plus cryptos as well, but that's dangerous territory for consistent profits, like we're trying to gain here. So yeah, basically I put my trade on, stop loss, take profit, and then I go about my day. And then, I mean, at first I'll watch it, what's happening, but then in the end, I think it's like watching a phone to ring, and it never rings. So I just go away and do chores around the house, or take my son to school. I just live my life for a few hours and then come back and just see where it is. If it's hit my stop loss, then I'll be okay with that, because I'm trading in probabilities. I'm not bothered about a losing trade or 2 losing trades, 3 losing trades. I'm not bothered. It's been hard to get there, but I am now there, so it's good. And I hope all you can become there as well, in that situation where you're just not bothered about your losers anymore. So if I lose that trade, then I will look to get back in, and I'll have more of an insight of where the market's actually going. Like I used to as well, put on one trade, think it's going the wrong way, and I'll take that trade off and go the other way. But that's messing about. You shouldn't mess about too much like that. But I used to do that, like tell you about my pitfalls, because everyone learns from other people's mistakes, and you shouldn't do that. So basically, yeah, I put my trade on, I make sure my stop loss is on and my take profits on, and then just walk away. Don't monitor it that much. And then I'll look on my phone if I'm in the car, and I'll just see like, oh, it's down a bit. And I'll say, well, why? And I'll reanalyze and be like, how far is it going to go down? Is it going to go to this order block? Have I missed that one? Like, okay, fair enough. If it takes me out. If it's in profit, say, okay, cool. How can I now put my stop loss into profit? So then it's a worry-free trade. And once it's a worry-free trade, I'll look to try and enter again. And then if it comes down on top, if it comes down to hit my stop loss, now I'm still in profit. So that's how I do it. I'll move my stop loss into profit if it's gone into profit. I'll move my stop loss into profit, so then I can't lose that trade. It's a worry-free trade. It's a risk-free trade. 0 risk. I'll look to enter another trade in that pair in the same direction. So I'm adding on to my success of where I am. And that's how you can like build your account pretty quick as well, if you like keep adding on to your trades. But you can't really do that over looking at multiple pairs, because you get confused of where you are and stuff. That's what I do. I have been anyway. So I'm keeping it to one trade, compound machine. Okay, guys, any other questions? You've all gone to sleep on me.
Yeah, I have a question, Simon. Which is the size of your stop loss? Because I mean, you said that you look for 3-to-1 risk reward. So like me, I use
depending what pair I'm trading. Whether it's a fast moving pair or a slow moving pair, at round about 30 pips. I'll do 30 pips. Yes, we are going to look at the charts right now.
Okay.
Yes. Yeah.
When you say you trade one pair, how many pairs do you analyze to look for a trade in the first place, or do you just literally look at one pair?
One. My mind gets confused.
Right.
And also they don't correlate as well as you think. So you think, oh, one's going up, or they're all going to go up off this. No, it's not like that. I'd rather just be one pair and then not get confused about what anything else is doing. I don't care what anything else is doing. As long as I'm nailing my pair. Use it as a compound machine. That's the key. You know,
which pair do you trade?
Oh, I can't tell you that. Bitcoin. I'm joking. Yeah, it's Great Britain CAD. It's an exotic, but it's a monster. And I used to really, really like Great Britain JPY, but it's too manipulative. It just throws you about too much. I find that Great Britain CAD doesn't manipulate as much as Great Britain JPY, and it moves like Great Britain JPY.
Okay.
So, yeah. I mean, it's only recently I've actually said to myself, I am going to only trade. It's been hard because there's so many opportunities out there. I think if there's nothing set up here, I'll go to here. But then like I find a trade on like Great Britain USD, and then won't find a trade on another pair, but I'll go back to the other pair, and I'll find a trade on that, and I'll go into that. And then in the end, you find you're over trading.
Yeah.
And one wins, one loses, or they both lose. You know, it's like your equity curve is all over the place because you're over trading. But if you keep it to just one and master that one pair, then your equity curve can be steady. And the more you win out your 10 trades, the steeper your equity curve. And also as well, that like trading in 10s and trading with a 30, 90 risk reward as well. 3-to-1 risk reward. If I think it's going to go further, I'll move my take profit, but just take partials where that 90 is, or 60 pip take profit is. I'll just take partials and let it run. If I think it's going to go further, to try and stay in as long as I can. But if it's ran the stops, it's finished its mission. It's finished its mission. So guys, what do you want to talk about? Do you want to talk about directional bias, order box breakers, market language?
Do you use algo on GBP CAD, the pair you trade?
Sorry?
Do you use algo on GBP CAD?
Yes. That's one of the major things I look for.
So I thought it works only on USD pairs, so it can work on any pair?
It can, but it doesn't work as good.
Okay.
But, yeah. Okay, guys, so we've got, at the minute, we're on Euro USD, and we have the ICT says the 9 and the 18 EMA. The ICT says the 9 and 18 EMA. Why isn't it letting me click it? Okay. Yeah, ICT talks about the 9 and 18 EMA, and I just changed it to the 10 and 20 for simple reasons of the maths is easier to do. With the maths is easier to do if you want to do maths. Like this is the 20 and the 10 EMA on the daily, and that's your directional bias. You mainly want to be trading in that direction only. So we have one trade and trading in one direction. So you've not got much leeway to lose, if you know what I mean, if you're trading with the overall trend of the 10 and 20 EMAs. The reason why I do 10 and 20 is because if you want to do the maths and divide times your 10 and 20 by 24, and you go into the hour, then you've got the 10 and 20 EMA on the hour, like the same settings, because price is fractal. I know you guys know your stuff, but we're trying to teach basics as well. So yeah, we've got, how do we trade? We trade with directional bias on the 10 and 20 EMAs. So for instance, we're on Euro USD. We should only be looking for sells, and we've had a nice sell-off today. So we can go over what happened today. If my PC isn't so slow. So we have Asia, London, and New York boxes here. And on the 7-day program, I talk about the times and stuff, so I won't go into that. So what happened here? I always look for order blocks on the hour. I think it's cleaner. It's very laggy, this. Sorry, guys. I always look for order blocks on the hour. So an order block, as we all know here, but for people who don't, we've got fast moves away from the down candles. I mean, I feel like I repeat myself, but everything is like, this is it really. It just needs to know the market language.
Hey Simon.
Yeah.
Just a quick clarification with order blocks. I learned recently. I learned from Michael.
Yeah.
He did not mention that. But like this candle, the black candle that you just showed.
Yeah.
It's not a qualified order block unless price has closed above the high of this candle.
The price is closed above here.
Yes, when the price.
Yeah, definitely. Yeah.
That's what I had a confusion about.
Yeah.
I always had that confusion.
You're finding them prematurely before the close. Well, you've got to have a fast move away, because that's the telltale signs. That's the footsteps of the institutionals giving the game away. You see one here, so fast move away from this down candle. Smart money is
I'm
buying in down candles.
Can I? So you see that black candle. I'm not. 1 second. There's something I learned from him.
You can annotate if you want.
Yes. Yep. I'm doing that. So the high of this candle is right there. So in a current market, let's talk about like in a current market. Let me clear. Just 1 second. It's not clearing for me. But this high right there, that's a high, and after it closes, you see this is already confirmed that this is an order block after the close, like in a current market.
First candle, yeah. Yes. Second candle that's broke it, yeah.
No, any candle. It can be third or fourth or fifth candle.
Yeah, no, but here's the second, yeah.
Here's a second candle.
Yeah.
And whenever it closes above, that's when it's confirmed that it's an order block. And then what I've noticed from him, I was watching his videos recently. You see this candle, the next candle right there, that candle? It came right into the top of that candle, of that order block.
The third white candle, yeah?
Yeah, this candle right there.
Comes back into it, yeah.
It goes and touches right into it. After this,
you can get in there if you like. That's absolutely fine if you want to get in there, but
so
will risk drawdown because it's not actually finished its move.
But that's what I understood from him. As soon as this candle is closed above this candle, black candle, it's a confirmed. That candle is a confirmed order block.
Yeah,
and then
any closed, it's confirmed order block. Into it, right? Yeah.
Any retracement into it is a buy.
That's it. Yeah.
That's the 1, 2, 3 movement, or how
The 1, 2, 3 is the breaker more so. So you see, you've got the low, lower, low, and then if you got low, lower, low, you can take this as a breaker. So anywhere in here, you would try and look. Once it's broke out of here, you would actually look for buying. So all down here, if you're selling down here, you're a mug really. If you actually know what you're doing, that's what people do. Though, like they think it's fast move down. They think, oh, it's broke this low. I'm gonna start selling. No, because you've got all it's doing is running stops.
Turtle soup,
yeah. Once it breaks the, this is the breaker here. We've got the breaker here, so it's an up candle before the down move is a bullish breaker. Smart money is selling in this candle, so it comes down, takes stops. So this is the 1, 2, 3 you're on about. 1, take stops. 2, breaker. 3, return, and it's free return to order block. So this is a really good trading scenario to get in here in the order block. If you miss this entry, you've got an order block here. So if you miss one entry, if you miss the entry and it's up above here, you can wait for return to this one, and away it goes. Ultimately taking stops above here. First profit would be round about here, and then second would be there. Third would be there if you wanted. So you just take profits at highs, pretty much. So yeah, that's good. Good that you spoke about that, Greg, because that's true. A lot of people might not know that because they've not been so far into ICT as we have. Yeah, it's got to close every time it's closed. It's even better on the daily. Like, you know, any candle that closes below a candle on the daily is like really strong. 9 times out of 10. Forex ain't perfect, but click the daily, and it's taken a while because I'm sharing and my PC's slow. So I'm trying to go to the daily time frame to show you on the daily. There we go. So yeah, once this candle's broken here, then yeah, it is an order block, a confirmed order block. We've got a confirmed order block here now. So we get break, retrace, into order block, down you go. And if you go to the hour, hopefully we can get there on the hour and see where we are. There we go. There we are. So yeah, so look, this is the order block that we've just highlighted on the daily. So price breaks it, and then once it comes back into the range, you look for a sell. And then on this day that we're looking for a sell, we've got the accumulation, and then we've got the manipulation, and then we've got the distribution. So it's A and B, power of 3, boom, boom, boom. So it's all lining up. Once the stars align, take the trade. So that's pretty much it. We need to know trending markets. We need to know the language of trending, order box, breakers, total soups, non-stops. Pull all that language into your mind in the right, knowing what each of the language means on the charts, and you can start reading price action for what it truly is. And that's where a lot of people struggle when they're starting off as well, because they've been told that people are buying in up candles and selling in down candles, when that's not true. They're actually doing the opposite. And that's how you can get ahead of the game, by knowing these footprints in the market where order box breakers are and stuff like that. So has anybody else got any other questions? So yeah, we covered order blocks and breakers there, which is nice. Me personally, I don't try and predict where the market's going to go for far. I like literally take it day by day and what the trade is giving me at the time, using a few other things.
Do you even look at the news, Simon?
I do, yes, I do. It's the first thing I do. Just look at the news.
Okay.
Before I even trade, I look at the news. But I did actually miss. I seen the morning news today, but I didn't see the afternoon news. So that wasn't very good. But it was a deeper retracement than I thought. I don't mind. So yeah, top down. So we go from. So charting, we've got like. If we look here, we go, oh, we've got an order block here on the monthly. That's nice. I mean, I wouldn't look to buy straight away because it's on the monthly. So we got to go to the weekly, see what we're doing on the weekly, see if we can refine that order block into smaller. So basically, the orders are stacking up. So they bought in this candle, boom, come back down. They're going to buy again. They're going to buy again. What's going on? Come on, man, can you mute yourself, please? Right. Where are we? Trying to forward.
Sorry about that, fellas.
No problem. Thought we were in an arcade or something then. But someone won a trade and they put on an arcade noise. Diddling. Okay, cool. Yeah, so what I was saying is we got the monthly order block, then we broke it down to the weekly order block, so we're trying to refine our entries, refine our zones to actually look for buys and sells. So we can refine this down even further. Not much really though. It's quite sloppy though if we did. You can also join candles up. So you got one candle, two candles, the same color. You can join them up to actually make a 2-day order block or a 2-hour order block or an 8-hour order block if you wanted. Why is it coming up? Okay, so from here, we're inside of a buy zone, really. So if we go down to the 4-hour, we're going to see where we're at within the buy zone. You're right. I'm actually on an important call, so yeah, if you really want to. No, that's not possible. There's no room. So we've actually got to run on stops here. No, no, that's not possible. Working from home. I need to get an office. So yeah, we've refined it down. We're actually in a buy zone. So I actually came into it here. So with it coming into it here, coming off to run stops, it has fulfilled its mission. This is why I don't like look for long charts.
Who are you speaking to?
All these people, online traders. Yes, this is why I don't look for long-term trades, because anything can really happen. Take it day by day with what I know and trade it day by day. So here we're inside of an order block, so we come out of the order block. That would have been a nice trade setup. It's good and funny enough, it's with what we went over before as well. So we've already broke this section down previously. So the price comes up, takes out stops and drops to take out stops again below the stops here. And when I say take on stops, imagine guys, there's like millions and millions and millions of dollars worth of stops. All these are institutional stops below here, and this is why the market's come back down to take them out. Then it's come sharply off an order block down here. So if we zoom in, just so you can see this better, there's an order block. Boom. Possible order block. I wouldn't try and take the trade until it's over. Can you mute yourself, please?
Guys talking to. Daddy.
What?
They are the guys you're talking to.
Yeah. So, yeah. Order block here on the hour. So we just have to wait now and see what happens. to just wait now and see what happens. Go to 15 minutes, see if we can see it further. But I'm not getting into predicting the market and stuff like that. Plus, another one of the things you can add to it, and this is the last one before we call it a night, because we've got some bells and whistles going, that fill in voids. So this is actually a void in the market, just one directional trade. So the market will want to fill in and come up to like this. Okay, 10 minutes cool. Come up to this order block, possibly. You never know. So. Okay, so that's the technicals for tonight. I think we've learned a lot already. So did you find that helpful, guys? It's getting darker and darker screen. Who's doing badly? Did you find that helpful, guys, so far?
Very, very helpful.
Okay, happy for you that it's helped you out in your trading development.
Who are you talking to?
Shh, if you want to say, you can be quiet. Please. Yeah, happy it's helped you out in your trading development, mindset and technical skills, because without one or the other, one's going to suffer. Straightforward. Appreciate that, guys. Appreciate that.
That's really helpful. Thank you.
Appreciate it. It'll get better and better each week, I think.
One small thing. How do you go about the news? Do you trade don't trade an hour before and an hour after, or?
Yeah, typically, yeah. Or half an hour, say half an hour before and after.
Okay.
Simple fact is the spread goes up, you know. Even if you're in a winning trade, it can just take you out, the spread. Boom, 20 pip spread, and if it's 10 pips away from your trade or 15 pips away from your trade, and it's bouncing around all over the show, and then you spread, boom, you're out. And then it goes in your favor. It's just not worth the hassle.
That happened to me last week with GJ. I was in a trade during New York's close and Asian Open was 5 o'clock my time.
Yeah.
But I think I had a 15-point spread. A 15-pip spread, but 15-point stop loss, and the spread jumped to like 168 pips, and the spread took me out my trade. Price never came to it, but the spread took me out.
You got burns, and that's why we make that rule up, guys. That's why we have rules in place and plans in place where we shouldn't do that. You know, that's why we do it, because you get burns, just like Timothy. Is it Timothy there?
Yeah.
I don't know if it's you.
I will say it was a profitable trade. I was moving my stop.
Which broker are you using?
Traded Way.
Damn, that's a hell of a spread.
It happens at 5 o'clock every day.
Wow.
And I knew it, and I didn't a lot for it. But
that's why I do not like it.
The trade was good. At that 5 o'clock, once the market changed, that spread took me right out. Like, damn. But it happens.
It happens, and with the mindset that you should have nowadays, or you should be trying to acquire, is you don't care about that loss.
Oh yeah, I was just bringing it up.
Yeah, that's good. That's good. Real life evidence. Yeah.
Like I said, I do know now. I don't normally trade about this time, but if I have a trade on right now, and I say in another hour, the spreads are going to triple. So if I do have a trade on right now, I need to make sure I move my stop loss in a lot for the trade. For the spread doing what it's going to do.
Yeah. Well, this is all advice. I'm not saying like do this, do that, do it to the T. Like make your own plans, get your own mindset in gear, do what you feel is right. But from experience, then it's not a good run trading news. It's not reliable. So. But it can be in your favor. It can really help you. Sometimes what I've done in the past is take my stop loss off, trade news if I'm 90% that it's going to go in my favor, and just wait it out and then put it back on. So then you don't get stopped out. You can do that, but it's risky, isn't it? It's like, depends whether you want to risk it or not. Anyway, guys, this has been the FX Acceleration Program Mastermind. One of many held every week on Tuesdays. If you want extra help in the Forex market, then check out the webinar and join the crew. So we're going to all, after this now, we're going to all go into the charts again and go deeper into Forex and why the Forex market moves, so we can live a profitable, so we can live a happy, abundant life and become a consistent, profitable trader.
Simon, how many members of the crew, I mean of the paid service, are here on the webinar? So maybe that way we can talk between each other to
We're going to do that now. Yeah, we're going to go into
secret sauce,
algo-driven markets, and all this, that, and the other. How the banks buy and sell, everything, all the juicy parts. Yeah. With that said, what we'll do is we'll come back on to another call and do that from there.